All right, hey everyone, good afternoon. It's Tim. It is 4 o'clock. Markets have been closed for a while. We've been trying to digest numbers from the crop conditions reports and just trying to put those in context with some of the things that we're seeing technically. So I'm going to spend quite a bit of time on corn here, so I'm going to jump into beans and wheat first, and then we'll go into corn. And stick with me for a little bit because we're going to dive pretty deep. Long story short, across all these grains, we are starting to think that these charts are turning more bullish and less bearish, and particularly in well, just in all three. But really, corn's the one that surprises us the most. So we're going to try to get into that here in a little bit. All right. So this is the weekly chart of November soybeans, and what's got us pretty interested in market activity here is this move back up through the cloud that we had last week. Okay, as you know, basic system, anything above the cloud we interpret as bullish. Now, what's interesting is that you got this red 2 and you got this blue 2 right here. Okay, wave 2s precede wave 3s, which makes sense. But the problem is we don't know which one which one it's going to be. So what we're looking for is what's the fundamental driver that could drive this thing higher, right? Obviously, higher prices are brought on by more demand and less supply, and lower prices are the opposite, right? More supply and less demand. So if we have a huge yield and demand starts to weaken, then we should expect this to tumble, to get pummeled and come all the way down into here, which for most of this year, that's what we've been looking for. Now, what's got us rethinking that whole strategy here is that that this move here came back up above here. So what we thought was happening was we thought we had a 1, and then we thought we had a big 2, and then we had a 1 and a 2. When we started trading back above this, it kind of changed things. It negated that weekly count, because you can't have a corrective wave like this that retraces the whole back up above this first move down. So now we're looking at it as an A, B, C for 2, which means that this whole thing here is a wave 1. Now, if I drop down to the daily chart of beans, you'll be able to see that. Hold on. You'll be able to see that more clearly as we drop down into here, because from here we've got 1, 2. You've got a 3, 4, 5. You've got a 3-wave move down for 1, A, B, C. And then you're up, down, and now you're back up. So when you break all this stuff down granularly, and I don't want to go through all of the time frames on beans, but when you break it all down, what it's pointing to is at least a retest of these highs, and certainly if that interpretation is right, we should break through them and move higher. And so all in all, we are looking for higher prices in beans. And what would the reason for that be? Well, the reason for that would be lower yield. And here's why we think that potential really exists. One, if you look at the drought monitors aren't showing drastic improvement, even though you've seen rains in the troubled areas, which would be Iowa and Illinois. In fact, if you compare this year to last year, the same week, Illinois was rated 62% good to excellent last year versus only 40% good to excellent this year. That's a 35.5% decline in good to excellent ratings year over year. And in Iowa, you're at 78 last year versus 58 this year, which is a 26% decline in good to excellent ratings. So you've got, and now keep it in perspective, because Iowa and Illinois combined last year to produce 25% of our net soybean crop, and they are 26 and 35.5% behind the good to excellent ratings compared to a year ago. So it's hard for us to think that we're going to press supply above into levels that are going to cause us to retrace all of this. I think it's got to come from weakness in demand, and hold with me, I'm going to get there in a minute. Now, one other thing that I didn't mention on the weekly chart that I want to point out is that this reversal that happened here, remember we think this was an A, then a B, then a C, What happened here is this retraced above the 61.8, right between 50 and 61.8 of the entire big move up. So what happens? Where do markets like to reverse from? Well, usually a Fibonacci relationship. So the fact that we've reversed, we've moved down into 3 waves on a weekly chart, posted a red 2, and reversed it at the 50% mark, lends credence to the idea that this is going to blow out the top. And if those yields, if these good to excellent ratings are any indication of what's to come, even though they were up a little bit today, they did go up compared to last week, I think 4%. But still, they're still that far behind even after they got a little bit better. So the good to excellent rating is not really indicative of a supply situation that would overwhelm the market and push us lower. I don't think we're there yet. So the only thing that's left is demand, and we're going to get to that here in just a minute when we look at corn. Okay, now I'm going to jump to wheat though first, because I think wheat is pretty interesting in and of itself. So if you look at the oscillators, they're all just coiling just like price. Okay, higher lows, lower highs, higher lows, lower highs. Same thing on the MACD. Higher lows on the histogram, lower highs. Same thing on price, right? Higher lows, lower highs. So something is coming in wheat, and it's going to be significant because of the length of time and the length of and the overall size of the range, both in time and in price. When this thing does decide to move out of it, it's going to run a significant amount of cents. Okay, we're not talking a 10-20 cent move out of this range. I think we're going to be able to measure that move in dollars. So what I want to do though is talk about the count here too, because you can see we've traded back above our daily chart. We've got this move from the peak, and if I were to back this back, you can see the peak that started at the end of 22. Okay, this is consolidated over. See how sideways this is? See how explosive this move is up, and see how sideways this one is? Well, that's indicative of counter trend price action. And so the move here, which was very impulsive from the bottom, we broke out the bottom of this range, and then we reversed and came back up. If you look at the action from here up, you actually have a 1, 2, 3, 4, 5. And now this whole thing is a wave 2. You have a 3-wave move down for A, B, C, D, E, and I think this could be a 1, 2 right here that we're counting in wheat. So this would be a triangle, and the reason this 2 is over here is because that's the low of the triangle. So what this is looking for are much higher prices and a significant thrust up out of here. Could that coincide with something in Russia? Maybe it coincides with dryness in India and trouble in Australia and trouble here, and the fact that wheat is relatively undervalued to corn in a lot of areas, so it's got to induce some planting. I don't know what the driver is, but the fundamentals could be there for this thing to pop on up higher. I know it doesn't look like that today because of the hook reversal here, but also another thing to think about in Elliott wave analysis. In a wave 2, the bearishness that got us to the prior low is often equal or exceeded in sentiment. So we rally and everyone naysays the rally, right? Think about beans. We've rallied and everyone says, oh, South America's big. We're going to have a monster crop. Our demand is crap. We don't need that. Well, now we break the market down and the bears say, ha, gotcha. See, told you so. And it just grinds sideways, but they can't get any momentum to the downside before the lid blows off. So I'm thinking that beans look really bullish, and I think that this looks really bullish too. But we've been concerned about being bullish wheat because we've been fairly bearish corn. Now I want to dig into this one and spend a little bit more time here. Okay, this is your weekly chart of December corn, and what I've got drawn on here are 2 rectangles. There's a red line that breaks up this box. Okay. And let's talk a little bit about an Elliott wave principle called alternation. A corrective wave 2 and 4 will oftentimes, and as a general rule of thumb, follow a guideline of alternation, which means that both in time and price, they'll do the opposite of the other. So here you see a shallow and short retracement of wave 1 for wave 2. Now, so alternation would say that wave 4 should be deep and long. So wave 4 has almost matched wave 3 in duration, and we've retraced down to 61.8. I don't want to clutter the chart up too much, but this is 38.2 of this. So wave 2 was short and shallow. Wave 4 is matching in duration, which is a long correction, and it's a deep retracement all the way down to here. So on the weekly chart, we have a 4, and we're looking for higher prices. So what about this big run up? Surely this big decline here that we had has to be impulsive, right? It's got to be the top, and we've got to be looking for something else. Well, maybe, but the problem with that is that this doesn't count well in 5 waves down here for 1. This is 1, 2, 3. And then it also doesn't count as a wave 2 if you call that impulsive. So you have giant impulsive move followed by giant impulsive move. Well, so those kind of negate each other. So you've got to look to something else. And I think what we're seeing here is an alignment of time frames and an alignment of price points where something significant could be coming in the corn market. So we've got a psychological barrier of $5 right here. We've got a hook reversal on this bar. We've got a massive engulfing, bullish engulfing shadow, and a double close key reversal on this bar. So last week was significant. The week before was significant, saying that the market is rejecting price action below $5. Now, something that's interesting here, and I'm just going to start walking down the time frames, okay? First of all, let's look at the daily chart. So daily chart, hey, we came up through the cloud, we came all the way back down, and we've consolidated. You know, this doesn't make a whole lot of sense on the daily chart from a wave perspective. So you kind of just have to ignore it and put it in context with what preceded it, which would be this corrective action that we looked at before. Now, from the low up, what gets interesting is the sequence that we've seen so far. And I'm going to start drilling down into time frames here, and I think you'll see what I'm talking about. So the question is can we retrace all the way back up and first take out 538? That's the report day high of the acreage of the planting of the acreage report. So that's the next major hurdle. Today we came out at we got rejected at 526 and we reversed. So what happens next? Well, let me jump down to a 360-minute chart. Okay, let's start breaking this day down. Well, now what you can see is a blue 2. So now we're up steep and back off in a 2 right on top of the bottom of the cloud, which is kind of a buy zone. Okay, so that's 360. Let me drill down to 240 minutes. 240 looks even a little bit better. In fact, you can start to see the substructure of this move up. Now you've got a blue 2 right coming back down on the top of the 4-hour cloud. That's bullish, and you're also right back into a natural area of chart resistance, right? Now let's drill down a little bit more, down into a 120-minute chart. Now you've got a double bullish count, which is a red B and a blue 2 right on top of your 120-minute cloud with all of this congestion area right in here. That's bullish. Now if you drop down to a 60-minute, you can see that this substructure is not quite yet done, and we're stalling out right above the right above this cloud. Now if I drop down to a 30, you can see a 5-wave structure that originated from the bottom. So you've got a 5-wave structure into a with a retracement that is retraced. Let's put this on here so you can see it. That's retraced right at 50%, right between 50 and 61.8%, which is a normal retracement, right on top of the 1 hour, 240, 1 hour, 120, 240, and 360-minute charts right on top of that cloud. It's an acute risk reward, because if something were to materialize to the bullish side here that would shrink supply or ignite demand, then I think corn could really get off to the races. So the same math on corn, right? Because the USDA has us at a 177 yield, which is an all-time record. Arlan Suderman came out today and has beans at 50 and corn at 173.6. So 173.6 versus 177, right? 3.5 bushels an acre. So how many bushels is that? That's roughly 400 million bushels. So you're 400 million bushels lower on supply, and the USDA is not really recognizing that, particularly if oil gets going and the energies start to pop. So there's been record inflows of money into oil funds over the last 10 days, I think is what Jeff told me earlier today, to the tune of over 100 million bushels or 100 million barrels. So if oil goes up $10, they make $1 billion. It goes up $50, right? You can do the math. So a lot of money traded hands into oil recently, and that's bullish. That's bullish energies. That coincides with a friend of mine that works in the industry that has become very, very bullish from an international perspective, and then you look at the corn's good to excellent ratings. Okay, so last year Iowa was at 81% good to excellent versus this year at 64. That's a 21% decrease. If you look at Illinois, 70% last year versus 41% this year. That's a 41% decrease in good to excellent ratings year over year, and 21% in Iowa. Between those two states, they made up 32% of our crop. So you've got a huge percent of our crop in much worse shape than we had a year ago. And the USDA has our yield at 177, which would be an all-time record, or matching the all-time record. And we're to the point of year where good to excellent ratings tend to start coming down. So I think we could be, this setup here is certainly not a gimme. It's certainly not a done deal at all. But this setup, every time frame, every chart we look at, corn, wheat, and beans, all of them have a bullish Elliott wave count. Every time frame has a bullish Elliott wave count. Your crop conditions aren't getting better. Your drought conditions are not getting better. The demand picture is getting stronger if energies pick up, and your supply situation is getting worse. So I think that we could end up with some pretty powerful upward movement here if those things come to pass. Well, what if, I'm not saying that we're going to rocket up out of here tonight, we're going to be limit up forever, because this thing's still got a lot of work to do and an awful lot of bearish sentiment that's been built up into this market, right? And if we do turn around and go lower, then something's going to materialize itself. I don't know what it would be, but I think that this is an acute risk reward and something that we need to be looking at across all of these markets. Beans are probably the most ripe and ready to rock and roll to the upside. Let me get that chart back up here, because of the how clean this structure is and how defined this risk reward is, right? It's real simple. Choose today's low or yesterday's low and be long above it, right? You only got a 21-cent risk for what could be dollars of upward potential. It's very good setup and a very nice time to hit it. And if we do come down, that doesn't change our mind at all. In fact, you can come all the way back down to this low here and not even touch that wave count or anything about that analysis. Remember, if Suderman's right and we have a bean yield of 50, then our carryout is negative. We can't afford to let that happen. So lower prices breaks are for buying in beans until something else materializes, and I think that's going to be enough to pull corn higher. All right, that's 18 minutes. I know that's an awful lot of information and a lot to digest. If you want to talk to us about it and push back, that's great. We're happy to go through all those numbers, and we're going to keep crunching them here to help make sense. But when you see time frames line up and you see counts line up, you see signals all come together at once with a fundamental story that starts to work, now you're talking about significant moves. Remember, in 2020, there was no reason whatsoever for the markets to start moving higher. Absolutely none. We had just had COVID, oil went negative, and we were looking at 3.5 billion bushel carryouts in corn. Zero reason for a rally, and we ignited something pretty spectacular. This time, we have less of a bearish story and more of a bullish story starting to begin with, and no room for error. So if those stories start to manifest, then the explosive price action we saw in 2020 and 21 won't compare to what you could see if that starts to happen in beans. Because remember, one last thing, in 2020 and 21 and in 22, we saw margin expansion across the bean products and the corn products. So ethanol expansions improved, ethanol margins improved, bean crushing margins improved. Everything expanded in the face of big price hikes, which means that if you're going to ration because you're running out, you've got to do something more dramatic than you did the first time because you have to compress them. You got to kill the margin in order to kill the demand and make those guys not buy it. So that could really get that price to be pretty volatile. The question is how do you time it? I'm sure there'll be a head fake or two in the middle. It's going to be not going to be easy to trade it, but I think right now it's sit tight and wait because we gotta have something bring the bearish news back into the market, and I don't think we have it today. All right, remember, everything we've talked about highlights the fact that there is risk trading futures and options. Nothing's a guaranteed result in this business. And if you are trading them, please do so in light of your own financial condition and be mindful of your own circumstances. I hope you guys have a great night. We'll be back with you tomorrow or Wednesday, depending on price action or as needed. Have a great evening. Talk to you later. Bye.